Ladies and gentlemen, good day and welcome to the Navneet Education Q1 FY23 earnings conference call hosted by Prabhudas Lilladher Private Limited. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Jinesh from Prabhudas Lilladher. Thank you and over to you, sir.
Thanks, Seema. First of all, slight apologies for a delayed start. Nonetheless, I welcome you all to the 1Q FY23 earnings call of Navneet Education Limited. We have with us the management represented by Mr. Sunil Gala, who's the MD, Mr. Kalpesh Dedia, CFO, and Mr. Rumi Mistry, who's the head IR. I would now like to hand over the call to the management for opening remarks, and after that we can open the floor for Q&A. Thank you, and over to you, Sunil bhai.
Thanks, Jinesh. Good morning, ladies and gentlemen. Thanks, Prabhudas Lilladher, for arranging this call. As mentioned in my Q3 Concall and in Q4 Concall also, most of the schools across India have opened up, barring few regional medium schools which opened little late. With these remarks, we are seeing a normal year ahead with little spillover in next quarter from first quarter. Though numbers compared to corresponding quarter looks far better, but simultaneously we are very conscious to compare current year's numbers with pre-pandemic year only. This I am talking internally at Navneet. We do compare this with pre-pandemic year only. With this, let me give you a brief view on businesses. So first I'll talk about publications business. So we have not been able to match or grow the numbers over Q1 20 numbers for the reasons which I will mention now. First was most of the regional medium schools actually started in third week of June across Maharashtra and Gujarat, which is our core areas. And they are still getting admissions as many of their students had shifted to government schools during pandemic. Because of this, part of the sales of Q1 got shifted to subsequent quarter. Second point was opening of schools across after almost 2 years. Many schools delayed their purchases as they were settling, they were busy in settling other important areas of the business, and therefore the decision on purchase of books was little delayed. Third was CBSE textbooks published when Navneet received good response. These were the two reasons for which I said this spillover. On publication business, I should also mention that CBSE textbook published by Navneet received good response across India with the combination of blended offering, including digital support. So we are confident of substantial growth over next couple of years as far as CBSE textbooks are concerned. And the fourth little important, I'm sure many of you would have a query on, is the paper prices. Paper price upward movement did continue. Thankfully, we were able to pass on the incremental cost to the end consumers, and therefore we could maintain the margins as you would have seen. Overall, I should say that we are confident of surpassing FY20 numbers for the full year of 23. There are some disturbances in between. If someone can be muted, please.
Sure, sir.
Thanks. Now I will talk on domestic stationery business. I should say, though it grew marginally over FY20 Q1 numbers, whereas we were expecting little better, but the reasons that I mentioned about publication business, the spillover reason, are the same applied here also. Overall, I should say that we are confident of achieving minimum 15% growth over FY20 numbers with better margins. Now on to exports. Because of the inflationary pressure, these are the instances in last 3 months that we have all have been hearing, that because of the inflationary pressures in our main market being the US, demand seemed to have slowed down very marginally right now, uh, but on our core categories. But thankfully, with the introduction of other category of stationery items, we are able to manage the growth. Unfortunately, we are not able to pass on the incremental input cost to all of our clients, barring few, and therefore, for this year, we may see little pressure on margins compared to earlier years. Now I will talk about our subsidiary Indianica. As you all know that Q4 is the best quarter for CBSE textbook business, and so is in Indianica. Preparation for Q4 for the current year order book is in full swing, and we are confident of achieving again 15 to 20% growth over last year. The offering of blended offering also helping here, and will further boost the demand for textbooks. So Navneet is much better placed as far as offering of textbook is concerned because of the digital support also, though through subsidiary, is being offered to the school. So a blended purchase or blended usage of product at the school level will benefit teachers and the students the most. I'll touch upon a little bit on our investment in K-12 Techno. So for this academic year, we have 60 schools under management, and company is well poised to offer services to additional 20 schools for next academic year. So we will be offering service to 80 schools next year. Simultaneously, it has started offering various services to non-Orchid schools. Orchid is our brand, just to remind you. So offering various services to non-Orchid school, which is very, very encouraging. Normally, after every 3 years of offering services to an individual school, our company starts generating decent profitability. And as you know, that this company is into aggressive growth plan, and therefore profitability-wise, we may not see much in these years. As you can now then understand that once we stop growing, profitability will be at a much better level. So overall, this ends my discussion on Q1 23 standalone and 2 subsidiaries, means 1 subsidiary and 1 investee company. Will be happy to answer questions. But now let me touch upon a little bit on Navneet Future Tech. As you all may know that earlier it was called eSense, and the name that we have now recently changed it to Navneet Future Tech. So first of all, I should all inform you all that I have taken over the charge as an MD, and Sanjeev Shah as joint MD of Navneet Future Tech. Also happy to announce onboarding of Mr. Karan Khemka as a non-independent director on the board of Navneet Future Tech. We are simultaneously very, very conscious of the fact that EdTech business needs smart and relevant teams. And I'm very, very happy here again to say that we have already appointed relevant team members, particularly for the EdTech business, and the recruitment process is in full swing. We have already recruited CXO level and senior level team members, and so we are definite that with the strong team in place and right guys from people like Karan, Sanjeev, we are definitely going to do much better here. Now I will request Sanjeev to brief you all on Navneet Future Tech going forward. Simultaneously, before I hand it over to Sanjeev, I also request all participants today, if we can discuss Q&A more, rather first on core business, and then we discuss on EdTech business. That will, keep the flow very smooth. Thank you.
Sir, should we begin with it? Okay.
Yeah, Sanjeev, can you start, please?
Sir, should we begin with the Q&A?
Yeah, okay. We can begin with Q&A on core business, and then Sanjeev will take it over and explain on the EdTech.
Okay, sir, all right. Ladies and gentlemen, we will now begin with the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Ladies and gentlemen, you are requested to use handsets while asking a question. We will wait for a moment while the question queue assembles. Thank you. We take the first question from the line of Prakash Kapadia from Anived Portfolio Managers. Please go ahead, sir.
Yeah, thanks for the opportunity. On the core business, Sunil bhai, what kind of a volume growth we've seen in the publication business? And, you mentioned in your opening remarks, the sales are slightly, extended in Q2 also. So is it across Maharashtra as well as Gujarat, or is it just Maharashtra where we are seeing, delayed school opening? And how is the sales trajectory post, the end of the quarter? Post June, we are seeing that traction?
Yeah, Prakash. So still volume growth has not yet come in. We are little around 10 to 12% behind our volume of Q1 20. And the reasons that I mentioned in my remarks are the same. So situation was the same across all schools, regional medium schools, Maharashtra and Gujarat, not only Maharashtra, Gujarat, I should say across India. But as far as we are concerned, across Maharashtra, Gujarat, regional medium schools did delay actual start or purchase of publications. So post Q1, we are continue to see regular orders coming in from those schools. So overall, when we complete first half, we are very sure that we will surpass Q1 numbers.
Okay.
Q1 20 numbers.
Yeah. That's good to know. Yeah. And on the stationery side, is there something on the export side, because those are also slightly lower as compared to Q1 20 numbers. So is there a change in buying pattern or customer behavior or newer customers which you added on the export side of stationery?
So unfortunately, the exports of stationery also shifts between Q4 and Q1. So at times the customer does take delivery in Q4, and if they say that supply us in first or second week of April, that gets posted to the next first quarter. So overall, if we see full year, we are very sure that though my guidance earlier was we will grow between 20-25%, but as I just said that we are seeing little slower in demand because of the inflationary pressure, particularly into the US. We may see little lower growth compared to what I had expected. So here also, every quarter to compare with corresponding quarters is little challenging unless we combine the Q4 and Q1.
Right. I was looking at Q1 20 numbers, so fine, I got an idea.
I agree. So in that case, what had happened, if you see Q4 19 numbers would be little lower.
Okay. Understood. So some spillover happened because of which Q1 20 looks slightly higher.
That's right.
Understood. On the newer initiatives, I'll come back. Thank you.
Sure.
Thank you. We take the next question from the line of Amit Khetan from Lebanon Capital. Please go ahead, sir.
Hi, good morning, and thank you for the opportunity. Sir, in the last call, you had mentioned about delay in getting students from the government schools back to the regional medium schools. How much of this, and we would have a better sense now, so how much of this has played out according to you, and how much could be a permanent loss?
Fundamentally, we believe at Navneet that students who are going to the private school, if they continue to go to government schools, it will be big impact on their overall educational growth, and therefore they have to shift back to the private schools. As we speak, part of June and most part of the July, students have shifted back to the private schools, and accordingly orders also have started coming in. I do not foresee a permanent loss here.
Understood. Thank you. I'll come back in the queue.
Sure.
Thank you, sir. We take the next question from the line of Sharvesh Gupta from Maximal Capital. Please go ahead, sir.
Good morning, sir, and thanks for taking my question. So my questions are mostly pertaining to the new tech, edtech businesses. So one is, if I see your run rate of losses, now, from an earlier of maybe 7-8 crores losses, I'm excluding the K-12 business. This quarter, it has more than doubled to around 15 odd crore. So is there a maximum? And now, also a lot of these businesses are in an early stage where you would need a lot of expansion in the marketing teams, marketing budget, and for selling them, right? So is there a cap on the losses that we foresee which will happen in our companies overall, excluding the K-12? So that is number one. And secondly, with regard to our investments also, I think this year, apart from the 30-40 odd crore that we wanted to invest in the companies that we had already committed, again we had put in like 60 odd crores. So is there a sort of a investment limit or budget that we have decided for these ventures? So what's the growth capital basically, and what is the cash burn that you foresee in these businesses?
Okay. So as far as, though I thought we'll discuss this later, but these are not business related questions directly. So let me throw light on this, that any new business that a company gets into, but obvious there will be initial losses. I understand that the edtech business that we are here for very long period, but now since last 1.5 years in particular, as every conference call I would have spoken about, we are going little aggressive in edtech business, and in that aggression we may see losses at the initial period, but simultaneously we are creating lots of value for a sustainable growth going forward. So with that conscious decision in mind, we have decided to recruit people and market the products once they are fully ready. We will need to spend money on. So that way, I do not foresee restriction of losses in the edtech business. And with respect to your question on, I had guided 30 to 40 crore versus 60 crores. Actually, these are earlier certain loans were given to the subsidiary, which we converted to equity, and therefore you see 60 crore. In reality, cash flow point of view, I do not think more than 20 crores have gone.
Okay. No, so my question was that this quarter we seem to have lost like maybe 15 crores or something. So what's the sort of your estimate of, how much money we are willing to lose this year and next year in all these tech ventures, taking into the consideration?
15 crore that you are mentioning, frankly, includes loss in Indianica.
Yes.
And if you recall, Indianica business, first 3 quarters always will be in loss because of the seasonality. In Q4, when major 80% of the business is done, I think all the losses gets adjusted against the profit. We had achieved, the India Nika was already breaking even at a cash level last year, and going forward with the growth, we are likely to see profitability. So at a year level, India Nika is not going to go into losses. Now, with respect to EdTech business, we are really in a initial stage, learning a lot during this period, learning from the markets, learning internally, and simultaneously appointing strong teams to take this forward on a long-term basis. And therefore, full year guidance-wise, whatever that I would have mentioned earlier, around 30-40 crore loss, that will be there.
Okay. And for next year, any guidance in the same?
I feel after 2 quarters, when we are very sure about the businesses that we are focusing in EdTech, when all the business plans would be very, very clear, and we will start marketing them, that time I'll be able to guide on the next year's investment come losses.
Okay. And on the investment side, we have already put in 60 crores. You are saying most of it was pre-committed. But in terms of the fresh money which needs to be deployed for growth in your tech businesses, as well as for any other tech investments as such. So what is the plan for this year and next?
So we are not going to make any other investments in EdTech except our core businesses or organic businesses that we want to grow. So I believe the investments would be in the nature of losses only.
Okay.
There won't be any fixed investments as such in EdTech business.
Okay. K-12 business, we have seen a very nice upswing on the profitability side of around 5 odd crores. But you also mentioned that, again, they are going into a very aggressive sort of a growth phase. So do we expect this sort of a run rate to be maintained, or it will also go into negative or break even sort of a number at a PAT level?
Again, K-12 business, school management business is little seasonal in nature. What I meant by aggressive growth plan, and therefore we don't see decent profitability, is we will see profitability in the range of, at a company level, between 30 to 50 crore. If we would have stopped growing, the numbers would have been much better. I was trying to give that clarity. So going forward during the year, we are hopeful, based on the discussions that we have had with them, that our share of profit should be in the range of around 12 to 15 crore.
For the full year. Okay. Okay, sir. Thank you and all the best.
Thank you, sir. We take the next question from the line of Sonal Kohli from Go Ahead. Please go ahead, sir.
Hello, Mr. Gala. Thank you for this opportunity. Sir, I had a couple of queries. Firstly, sir, why are we comparing our numbers with FY20? Because when I see your numbers from FY20, at least on a seasonality basis, your Q1 publication revenues in FY20 was 62% of full year revenues, which is the highest in last, I think, 15 years. So any specific reason you would want to only compare with FY20? Because, that's not a normal year for you in terms of seasonality, at least for Q1.
I fully agree, Sonal, and you are very right that in FY20, we had 2 grade curriculum change in Gujarat, and therefore we saw a little higher bump during that period. But normally one would compare it with the corresponding earlier year, and we thought we should compare it with the non-pandemic year, and therefore that was the only year that we could speak about, and therefore we are comparing it with FY20.
So, no, I don't have an issue in comparing with the full year, sir. What I meant was, why compare Q1 with Q1 when Q1 we know is a completely abnormal compared to the normal years for the business even in FY20. So 22, 21 are more abnormal, but even 20 was abnormal in terms of base, the base being too high.
I know, you're very right, but as I said, we could not compare it with earlier 2 years, and therefore non-pandemic year we started comparing it with, and you're very right. If we look at it the way you are saying, we should have compared it with FY18 then.
Sir, secondly, sir, as far as your export business is concerned, pre-pandemic, at a very rough level, what was office stationery contribution in your view? If you have some idea, as a percentage of your total export stationery business.
If I recollect correctly, it was around 17 to 18% then.
Understood. And sir, considering the offices have not fully open, is that business, even currently also in, people are working from home, is that the business which has seen more fall as of now? And, does that explain part of the weakness?
So thankfully, though offices are not working, but people at home also do need stationery, and therefore that we are not really seeing much degrowth there. And simultaneously, as I mentioned, apart from the paper-only stationery that we were supplying earlier, and now supplying various different kinds of PP or poly-made stationery, so overall portfolio has grown to be offered to them. So that we are not showing, but overall, I should say that normally US is very, very high consuming economy, and because of the overall inflationary trend prevailing there, like every other commodities, even we saw little slower. That's what I'm saying from the end consumer point of view, and that we discuss with the buyers. And not that we have started receiving lesser orders, but future looks little slow after talking to the buyers.
So, sir, we were expecting it to be a flat year as far as export was concerned because of higher inventory at the retailer levels, right? Would you maintain that guidance, or I heard you saying that you will actually grow this year? So I'm not sure, what was the earlier guidance? If you could repeat, it will be really helpful.
Yes, Sonal, what I recall having mentioned last year, that it would be a flat year compared to pre-pandemic year, because in FY 2021 they were left with lots of inventory, and therefore 21-22 we were not expecting growth. But now come 22-23, for which we are talking, we are very confident of growing this year.
Okay. And sir, that long-term growth, beyond this year of 25% by increasing market share through products and due to China one, does that maintain, or, even that looks unlikely to you, from a longer-term perspective,
I do maintain, except for this year where we, as I was expecting between 20-25%, we may grow at 15% because of the current year's position prevailing and what we hear from the customers.
Sir, my other question was...
I should also mention here that lots and lots of inquiries are coming in. I think the challenge is internal, that apart from paper and poly, that stationery that we export, they want different types of other stationery products for which we do not have capacity or infra to manufacture. But we are working on many of them. Therefore, I will continue to maintain my guidance.
Sir, when you look at the impact on your publication business with students having moved in the initial phase at least to the government schools, and now you said they're coming back, versus late opening of the schools due to maintaining COVID norms, which do you think was a bigger impact for you, or you wouldn't have that kind of numbers?
That is too minute because it is so much fragmented, we wouldn't know. But as we understand from the street, clearly we see that regional medium school students shifting to the government school was the main reason.
But is it true that the schools opened? Okay, you already mentioned that in your notes that the schools had more other issues to look at when they opened up, so sales got postponed. Okay. Sir, lastly, sir, on your school business, K-12 business, what kind of valuation was for the company? When was the last transaction in that company, and what was it valued at?
Yeah, so last valuation at which the new investor had come in was at $300 million. So in rupee terms, then it was around 2250 crore. That was the value then.
And so this was how long back, and what is your current equity stake in the company?
That was September 21. And our equity pre-ESOP is 27.3%.
So this 2250 was post-money or pre-money?
That was pre-money.
So post-money would be, okay.
24.
24. So you have 27-28% of that company right now.
Yes.
And sir, any valuation of this company you've done in the recent past? Would it be lower value? Would it be higher value? Would it be around similar value in your view? And are there any plans for further fundraising by this company over next, 1 year or so to fund expansion?
Yeah, our company is working on further fundraise because of the further growth that we want to have. And initial talks that we are hearing is that it will be better than the earlier valuation.
And sir, would you be also participating in this? And if so, would there be a cap on the amount you'll put?
No. The existing shareholders being Sequoia and us, we are not going to participate. So it will be a new shareholder.
Understood, sir. And that's it for from my side, and I'll come back in the queue. Thank you.
Sure.
Thank you very much, sir. We take the next question from the line of Samarth Singh from TPF Capital. Please go ahead, sir.
Good morning. All my questions have been answered. When we are talking about the new businesses, if you could talk about how SFA is doing and is it meeting our expectations, especially given the rich valuations we paid for that business. Thank you.
Yeah. So, Samarth, we'll take this question when Sanjeev gives overall view on the EdTech business, including the investee companies.
Excellent. So, thank you, and congratulations on a good quarter.
Thanks.
Thank you very much, sir. We take the next question from the line of Yash Sachadeva from FinInterest Capital. Please go ahead.
Yeah, hi, sir. Just had one question that with implementation of new education policy, what impact or developments as a company are we expecting in the business relating to the growth trajectory in the future? And also, if you could throw some light on the EdTech business as to how it is aligned with the new education policy.
Sure. So, as what we finally see, new education policy was approved by the center, and the implementation of that was left it onto the state governments. What we hear from respective state governments, including Maharashtra, Gujarat, that the implementation process is little slow, and therefore they are still not sure when will they be able to start implementation. All the school authorities or the education ministry was busy in restarting of the whole system, and therefore that they have not yet started. Once that gets started implementation, we'll have couple of advantage. Number one, the curriculum of various grades will change over 4 years. An introduction of new titles means the books that we never had. Couple of subjects we will be able to offer new titles to the school, so that will be the second advantage. And as far as EdTech business is concerned, it's not purely on business, and therefore I'm replying right now. EdTech business, there are lots of expectation by the central government to implement the technology into the overall curriculum, and therefore the Navneet group will have an advantage of delivering not only the print publications but simultaneously various digital offerings also. So overall, I may not be able to pinpoint exactly how is it going to benefit, but the way it is mentioned in NEP, Navneet will really be benefited.
Right, sir. Right. Thank you. That's all from my side.
Thank you, sir. We take the next question from the line of Gaurav Agarwal from GA Investments. Please go ahead.
Hello, sir. Thank you for the opportunity. So I just wanted to get a couple of numbers on Navneet Future Tech. What was the net worth and cash holding at the end of FY22, or maybe at the end of June 2022?
What was the cash?
Yeah.
No, what was the? Can you repeat your question, please?
The cash and the cash equivalents at the Navneet Future Tech level.
We have very hardly cash left, and Navneet will have to further invest for its future growth. So we would hardly have around 5 to 5.5 crore right now left in the company, and further required for the growth, majorly to spend money on implementing various businesses. Navneet will have to commit further money to the.
So for that, we have already guided for 60 crore rupees, right, for FY23. Which will come from Navneet Education Limited.
Yeah. So 60 crore, as I mentioned in between, major of that was earlier given as loan in the earlier year, and that we got it converted to equity. Therefore, we see 60 crore. Actual cash outflow was hardly 20 crore in the current year till date.
And how much further will we invest, like for the next 3 quarters?
Yeah, so further we, as you are mentioning, around between 30 to 40 crore we will have to invest.
Okay. And sir, beyond that, for FY24, have we given any thought how much further would we want to burn here? Or would we be open to, raise outside capital also from venture capital funds or from other PE funds, to support the growth as well as to have confidence that these businesses are doing good and outside people are also having confidence on these businesses?
I fully agree with you. As I mentioned to someone earlier, I will not be able to guide anything right now as far as the future investment required, till the time we finalize our business plans, which will happen over a period of next 2 quarters. Because things are shaping up, we are very, very conscious that we want to focus on the areas that we want to focus on. We just don't want to splurge money on any EdTech initiative, and therefore we are very with that conscious in mind. We are figuring out what will happen. So as I said a little earlier, a while ago, that post 2 quarters I will be able to give guidance on this.
आपण ज्या व्यक्तीसोबत बोलत आहात त्या व्यक्तीने आपला कॉल होल्डवर.
Okay, sir. Thank you so much.
Thank you.
Thank you, sir. We would now request Sanjeev sir to go ahead with his comments. Sir, you may please go ahead. Your line is in talk mode.
Thank you. Thank you, everybody. Good morning, and privileged to be on this business of Navneet Future Tech with an executive responsibility, huge responsibility, and very excited to play this role, to work closely with Sunil and the other teams that are joining us. So the initial focus that we have created for ourselves is really to work on the current Navneet strengths, which is why the business that has actually rolled out immediately is the business that we are calling Navneet Top Tech. This business was earlier known as eSense, but we have rebranded this as Top Tech. This is a business that focuses on the school as a customer, and it is a complete B2B business. We have the advantage of Navneet Education having deep inroads with schools for more than 3-4 decades, And with their relationships with the schools and the extremely huge and relevant content library, we are working with these two strong pillars to build the top tech business. So the current activity across Navneet Future Tech, while there are other businesses which are being researched and developed, the one business which is already out there with sales teams and signing up customers is Navneet Top Tech. This business will also grow as we move further into the CBSE network and the state boards. But the focus across Navneet Future Tech will be driven mostly by this B2B orientation for the next 2 to 3 quarters. The other two businesses which are under extensive research and close to nearly finalizing the business plans, one of them is a tutoring business, which is a business similar to tutoring SaaS enterprise, where our customer will be. I'm sorry, there is some disturbance. If I may request that person to please be on mute. Yeah. Thank you. So the second business that we will launch in the next quarter is the business focused on tutors and coaching institutes, where we will be offering a SaaS cum ERP platform, which will have the additional services of content to help the tuition teachers and the tutors actually create more leverage with their business. And this is an activity which is again significantly developed. You all may recollect that Navneet has invested in a company called GenNext Students. That is the company which we already own more than 50%. It is a subsidiary, and we are focused on the tutoring SaaS business along with a content orientation through that entity. So this is the next business which will go into the market in the next quarter. As we speak, we are developing the platform with strong feedback from customers, very clear feedback from customers, and we are making sure that our product is well positioned to then integrate with all the content that we are plugging in for the tutors and the coaching institutes. This is, again, like I said, it's going to be a B2B focus only. The third business, which is still at a drawing board stage and where we don't have a lot of data to share today, is actually the B2C business, where we are undergoing a lot of research on how we will address the pre-primary age group, which is basically children from the age of 2 to 10, 2 to 8 mostly. And this is a business which will have, we are being a little more careful and patient with this because it is B2C, and the nature of the B2C businesses, it requires a lot more investment in brand building, marketing, and the customer acquisition costs. So we are being extremely careful about how we. Sorry.
I'm sorry, sir. The somebody talking in the background, sir. Sanjeev, sir.
Yeah. No, okay. I'll continue then. So I think the question on the B2C side requires a larger debate, and we have now, in fact, gotten a CEO to run that business. His name is Gaurang Sangvi. He joined us a couple of months ago, and we are working closely with him and the team to develop the clarity on what we should do in the pre-primary segment. This is likely to be focused, between India and maybe a couple of markets outside India. But like I said, today we don't have enough clarity to guide you on exactly what we will do on the B2C side. Given the nature of the investments, we are being a bit more careful on how we are evaluating this. So we are not going to launch this in the next 1 or 2 quarters. It will be a business that may get into the market probably in the last quarter of this year. We are not even 100% sure of that, but it may be something that will happen in January, February, March in that quarter. But it will require a lot more work before that for us to get convinced as a management team, and then of course working closely with the board. And once we have everybody's conviction, we will look at the B2C business as well. So these are the initial comments from my side. Samarth had raised a specific question on SFA. If I can address that now itself. The SFA partnership is currently actually finally getting into the school system. We have been quite busy with top tech salespeople focused on the top tech core business. So the idea was to make sure that we establish the top tech platform and the prominence from a sales pitch with the schools and to get our core business established with customers, which is why the first 2 months of this year we have not gone aggressively with the SFA teams to meet schools. But as we speak, we are now working very closely with SFA to get in front of schools and to pitch the sports business to the schools separately from the top tech platform. But this effort is underway. We think it will take close to 2 to 3 months to get a good feel of what is the potential from a P&L point of view. But the initial feedback is encouraging. Most schools are clearly realizing the value of sports from a child development point of view. Some schools also realize the value of sports from a commercial perspective. But our objective is to work with SFA and make sure that we deliver the outcomes that the school expects. Especially, we have to be a bit more careful because this is not an outcome which is in our control. But with the SFA team, we are pretty confident that they have enough expertise to manage all these relationships and do a good job with the school. But the meetings have just started now, given that the top tech team was busy with its own business focus. So that is an answer for you, Samar. Yes, these are my initial comments. Happy to take questions.
Thank you, sir. A reminder to all the participants, anyone who wishes to ask a question may press star and 1 on their touchtone phone. We take the next question from the line of Mr. Kunal Mehta, H&M Finance Securities. Please go ahead, sir.
Thank you for the opportunity. Sanjeev sir, would K-12 and the 3 initiatives that you mentioned, Topside, GymNext and DeepBridge, would be having some overlap, and do we intend to use their expertise for our business since they are already well established?
Kunal, the simple answer to that is no, because that is a very important financial investment that Navneet has made. It is not a strategic investment for us from a synergy or a partnership point of view. So K-12 Techno is a business that works completely independently, and we don't have any linkages with them. At this point of time, we don't have any reason to establish any bridge with them, so to say, for our edtech businesses, because they are independent from product perspective also. And we are clearly currently focused on using the Navneet ecosystem to build our edtech business, which is where our initial focus will be. So we are not working with K-12 Techno on any synergy or strategic orientation.
Okay. And one more question. Sir, are Mr. Harshil Gala and Devish Gala from the promoter family? One is heading Top Tech and one who's going to be GymNext?
Yes, that is right. Both are part of the same family, which is the promoter group of Navneet Education Limited.
Fine. That's it. That's it from my side. Thank you.
Thank you very much, sir. We take the next question from the line of Tanuj Kiani from Kamayaka. Please go ahead, sir.
Yeah, thank you for the opportunity. My question was on the EBITDA margins. So can you give us a guidance on what kind of EBITDA margins can we expect for the next year?
I assume this question is for the core business.
Yeah. Are you talking about the core business, please?
Yeah, for the core.
Yeah. So as I mentioned these also earlier, we should be able to maintain between 21 to 22% on a blended level.
Okay. Thank you so much.
Thank you very much, sir. We take the next question from the line of Ranjan Shah, investor. Please go ahead, sir.
Hello. Good morning, Sunil Bhai. I had one question for you and another one for Sanju Bhai.
Sure.
Sunil Bhai, for FY20, we reported a consolidated income of 1450 crore,
Right.
And a profit of, I think, about 200 crores. Standalone profit was about 220 crores.
That's
so
right.
current year, do we expect these numbers, similar numbers or better numbers? Because you mentioned that we'll be suffering a loss of about 30-40 crore in the edtech business in the current year. So my question was, the standalone profit, can we expect at 220 crores and the consolidated profit at about 180 crore, which will be less than FY20 consolidated numbers?
Yes, please. I'm confident on that.
Okay, so we'll achieve 220 crore of profit on standalone basis and about 180 crore on consolidated basis.
That's right.
Achha, fine. And another question was, any plans for the fourth buyback?
Not yet planned right now, so I will not be able to comment on that right now.
Okay. And any plans to raise funds for the edtech business, Sanjeev bhai?
So at this stage, I think Sunil addressed that point. We are currently focused on establishing a lot of clarity and confidence in the business plan itself. And like we said, the B2B businesses will be first off the block. The B2C business will require another quarter or more for business clarity. So I don't have a specific answer to that question, but for the moment, we are very clear that the focus is on execution. And I think at the time when our business plans are ready, we will then be able to address the need for funding if it comes up from external sources.
But Sanjeev and Sunil bhai, I had one point actually. The edtech business is going to be in losses for the next 2-3 years at least. That is what we agree. So in that case, if we were to raise funds in edtech business, wouldn't the dilution be very high? Instead, if we raise funds in Navneet, because the stock is undervalued, it's at hardly 10 PE multiple. If the branding and media is taken care of, I think the stock can easily go up. I mean, you have been performing for the last 15-20 years. The market is giving a stepmotherly PE multiple to our company. If the PE multiple goes to 20, the stock can go to 200, market cap can go to 4,000 crore, and then we can do a QIP and raise funds in Navneet and then fund the edtech business instead of funding a loss-making. If we fund a loss-making business and raise funds in edtech, the dilution will be very heavy.
So I'll try and answer this. That this point is well taken. As we just spoke, that once we have clarity on the requirement of funds in edtech business, at that time we will definitely evaluate this suggestion of yours whether to raise at a parent level or a subsidiary level. Fortunately, there are certain PEs who would like to just focus on the edtech business, and they may not want to really invest in the core businesses. And therefore, we'll have to see after talking to investor, we'll come to know where their interest is. But of course, we will take interest from a group point of view and decide.
Fine, sir, fine. I wish you all the best, and I see the same future for Navneet Future Tech as we have seen the case of Navneet. So all the best to you, sir. Thank you.
Sure, thanks.
Thank you, sir. We take the next question from the line of Varun Gupta from RA Securities Private Limited. Please go ahead, sir.
Yeah, good afternoon, sir. Thanks for taking my question. My question is on one part of balance sheet, which is related to related party transactions. We own brands by KMP, and we also own properties in KMP for which we are paying the lease rentals. And now we're doing the asset sale to KMP. So what is the rationale behind it, and going forward, can we see this to be increasing or decreasing, or what is the view about?
Confidence?
So, this has been there since inception of the company, and actually the royalties are paid to the promoter-owned firms. There are certain reasons. The authors in particular, at times they do want to deal with the family only. there are certain set of authors, and it was a conscious decision for last 20 years, or maybe since inception, as I said, since 94, this practice is on. You should simultaneously keep that in mind that the original brands, the Navneet, Vikas and Gala, were also owned by the family. But we took a conscious call, and around 97, 98, we had sold those brands to the company at rupee 1. So you can understand the intention. So this is just I'm all reminding you all on the consciousness of the family members. Secondly, on the property, there are certain properties in Mumbai and Ahmedabad. At Ahmedabad, we are very clear that we would like to, we will not transfer the property to the company because unnecessarily that will bring balance sheet burden to the company. Instead, we will identify right place in future for the company, and we will deal with the property at a promoter level. Similar is the case with Mumbai property. These are the only two properties when we started the company in 94, where we the promoters owned these properties. Rest, all the properties that were required for the business were bought only in the company. So from that also you can understand the mindset of the promoters that we do not want to unnecessarily burden the company. Depending on its requirement in future, company will start owning its own properties.
Thank you so much, sir. Thank you.
Thank you very much, sir. We take the next question from the line of Ronak Singhvi, investor. Please go ahead, sir.
Yeah, thank you. Thank you for the opportunity. I have a couple of questions, including generally on the business as well. One, there is another investment which you guys made in Tinkerly, which is a Jaipur-based tech company. So any rationale for investment in that? Because I don't see any update on that. And also on the expansion on the CBSE schools, because since the business has established and the brand is well established in Gujarat and Maharashtra, but there are so many other states where there are plan which to accelerate the growth, because that can catapult the growth significantly. So on that piece, and one is actually on the competitive intensity. Due to the pandemic, because a lot of small publishers have suffered big time, and also with the advent of NEP and this blended learning, and there are players like Lead School who have taken some bit of market share now with their blended approach. So sort of just wanted to understand your perspective on these 3 points. Thank you.
Sanjeev, I'll take this question.
Sure.
First of all, to all our valued investor and analyst fraternity, I should at least give my view on the education business per se. I'm not talking about Navneet or its tech initiative right now. Clearly, the usage of technology in the school ecosystem, I don't think so. There is any they cannot escape this. So it is very, very important for the group to look at its core business, which also we believe that is going to continue for a very, very long period or maybe forever. But simultaneously, usage of technology cannot be forgotten, and therefore very important for the company to focus both areas together. Now, to a particular answer on Tinkerly, Tinkerly was also into setting up STEM labs into the schools. We thought that this is one of the area where schools will be investing a lot because of the not only NEP but otherwise also STEM labs will be must for each and every school, and therefore we invested in that company. Now that we are realizing that schools, or particularly Niti Aayog, which was supporting this investment into the school, is going a little slow. So our investment is just 5.5 crore. So with that small number, we are trying to understand what will be the decision of the schools going forward as far as STEM laboratories are concerned, and feel that. So sitting in the company, we will always have better clarity other than just getting information, and therefore we have invested in that company. We are not further investing in that company now. As far as your question on CBSE schools which are growing, you are very right that those are growing at a very, very rapid pace across the country. But maybe a couple of times we have discussed this. We have advantage not only from Maharashtra, Gujarat, which is our strong foothold, but with our investment at India Nika around 6-7 years ago, which was already supplying books to all India CBSE schools. And similarly, we have certain titles on CBSE at Navneet also, and which also we are marketing all India. So for CBSE titles, group's focus is not only Maharashtra, Gujarat, but it is across. And your last point on lead schools or the blended learning, which also I mentioned in my opening remarks today, that it is very important for any company to have both the physical products that they were using for so long as well as the new technology product. And we are fortunate that Navneet has now both, one already existing very strongly, and second, we are in the process of making that a reality. So at a future date, now from Navneet Group's offering point of view, I think whatever school requires on a blended basis, Navneet will be ready to support that.
Thank you, sir. Sir, I just wanted one clarification specifically on this competitive intensity from other publishers. How is it pre-pandemic and now?
So, with respect to publishing business, you're very right that couple of small publishers found it very difficult to sustain during this pandemic period, as well as this paper incremental cycle scenario as of now. But for you may recall that each publisher are enjoying handsome EBITDA margins on their business. So though very small publishers did suffer, but medium to large publishers could continue and continue in this period also. So there is no big change in closing down of various companies, but overall, as I think time passes with more and more CBSE penetration, CBSE curriculum penetration in the country, there will have to be consolidation that we are very sure of.
Thank you. Thank you very much, sir. Thank you.
Thank you, sir. We take the next question from the line of Pavan Nahar, investor. Please go ahead, sir.
Thank you very much. And pardon me, a few questions are repetitions because I got disconnected. So first question would be, so you mentioned 30-40 crores FY23 loss for the EdTech side. Now this 30-40 crores loss is including profits from K-12 or excluding profits from K-12?
It will be excluding.
Okay. So and it assumes 30-40 assumes basically K-12 profits will be counted separately, and the India Nika anyways we assume will be break-even. So 30-40 crores will be more like a cash burn X of these.
Yes.
Okay, fine. So that is okay. Second thing would be that for the publishing business, I'm sorry if you could repeat what is your guidance, because let's not get into quarter. And number two is that we fully understand that whatever you speak is in whatever best say, right? And things can go different. So as on today, for the full year versus or if you just want to put an absolute number for the publishing business revenues and margins for this year. whatever best case you would like to.
So, Mr. Sonal Kohli did corrected me that FY20, with which we compare our numbers, wherein we had clocked revenue of 700 crores in publishing, and this year in the first quarter, though we are lagging behind, but what our gut feel or what we understand from the street, that we should be able to at least match the revenue number of FY20. We are little hopeful of growing that also beyond that. And as far as margins are concerned, we will continue to enjoy between 33 to 35% EBITDA margin in that business.
So 733 to 35% EBITDA margin in that business.
Yes,
okay.
Please.
And 700 was March 20, but given the inflation that has happened, to talk about a flat number, because even March 19 was 710 crores. So I don't know. I'm sorry, Kunal did speak about it, but I'm just saying that 2 years we had 710 crores. So maybe both were normal. I mean, at least. And keeping in mind.
Yeah, I should come in here. You are very right that there is inflationary also adjusted in these numbers. March 19 and March 20, there was continuous curriculum change cycle already happening. That was the reason of that growth. So this year, you are right that if we achieve 700 crore, there could be some volume degrowth that you are, I think, hinting at. So we are that way internally. Our guidance is to at least achieve the same volume, and therefore see better number than FY20. But as you know, we have always been little conservative in giving guidances. So
okay, so 733 to 35% margin, EBITDA margin. Second question would be that we understand that state boards may defer the curriculum change, etc. But over the next few years, right? So if not next year, maybe after that, right? Once this process begins, what is the kind of growth we would see, like for, the 4-year period after that curriculum change begins?
Normally,
we'll do it in FY24 for a moment.
Yeah. So whenever curriculum change cycle starts in state curriculum, as per our past history, we have always seen between 12 to 20% growth, depending on the grade for which the curriculum is changing. If it is for the higher grades, the growth is in the range of 18-20%, and if it is lower grades, then it is around 12%. So blended, if we see for 4 years continuously, we should grow around 15%.
So let's put it like this: for the next 5 years, right? We should see a healthy growth in publishing business too. I mean, it could be the growth begins after 2 years, it could be after 1 year, but we should see. Okay. The second thing would be on the stationery business, right? In March 20, we've done is it right for me to compare March 20, given that, this business was pretty much okay even during the pandemic? So, or let's put it very simple. So basically, what is the full year revenue you think you could do from stationery, domestic plus exports combined, and the margin there?
So in March 20 we had done 740 odd crore in stationery, of which around 500 crore was exports. Domestic stationery did took a hitting during pandemic in India, but exports, of course, except the FY21, we came back to the pre-pandemic level, to which I am foreseeing around 15 to 17% growth in the current year. And domestic stationery, the balance part 250 crore that we had, should grow by around 10 to 12%. So overall, we should see a growth of around 12% over FY20 number.
850 crores revenue basically for this.
Yes, please. And at EBITDA margin level, we should see which uses to be around 12% earlier, blended between exports and domestic, should more or less remain the same.
Sorry, can you repeat that? So 12 to 15 should remain same.
12 to 13% that we were achieving the EBITDA margin for stationery business, which was blended. Exports generates more and domestic generates less. But blended was that margin, and we are hopeful of achieving the same in the current year as well.
So got it. So basically, if I were to sum up these two, we are talking about maybe 330 crores of EBITDA this year. All as we see it today, things can change, could be lower, higher, right? And then there will be, let's say, we reduce 40 crores of, the cash burn, and we add the K-12 profits. Okay, fine, sir. Then after this, the stationery business, let's say, we're talking a little somber this year, but what is the outlook for the next few years for stationery, domestic?
We are very bullish on both. Domestic, of course, we will not aggressively grow because of the unhealthy competition prevailing, but in exports, we foresee huge potential, and we are working for not only existing categories, but for the newer categories also.
So earlier we would say more than 20% growth. Forget FY20, like we start FY24, 25. So can we continue to think more than 20% growth, or you want to say 30% growth for exports?
No, I think at a blended level, again, we should consider between 18 to 20% growth.
At a blended. So exports would be more like, 30% or whatever. I mean, blended. Exports would be how much? I would assume, let's say domestic remains flat. For exports, what kind of growth?
This year it will be 15 to 17, and then year after we are confident of 20% growth.
20%, and which will also mean higher margins for us.
Yes, please.
Okay. So thank you so much. This is very useful, and really appreciate the.
Smita, she's not joining. She has some other meeting which has come up, so she will not join. But Puneet should join. Okay.
I'm done. Thank you.
Thank you, Mr. Nahar. Ladies and gentlemen, that was the last question for the day. I would now like to hand the conference over to the management for the closing comments. Thank you, and over to you, sir.
So thank you all. I once again thank everyone to take interest in our company, as well as I thank Prabhudas Leeladhar for arranging this call every quarter. And any question that any one of you still have, you may refer to our IR, Mr. Rumi Mistry, and we'll happy to give answer to each one of them. Thank you.
Thank you, everybody.
Thank you. On behalf of Prabhudas Leeladhar Private Limited, that concludes this conference call. Thank you for joining us. You may now disconnect your lines.